What about buying up here? The breakout of resistance, yesterday 15 low, today high of the day. Breakout above a double top. You can buy, we're always in long, so you can buy for any reason. Minimum stop below 20. Coming into the day, I thought a trading range was likely, but I thought we would get a rally, at least to that trend line. So we've had that rally. I don't know if 22 becomes a measuring gap that takes us up to near yesterday's lower high over here. I'm just trying to make sure that my measured move is anchored correctly, open of the day and low of the day. Looks like we went one tick above it. A second leg up was likely after the 16 breakout. We've had the second leg up. I don't know if a third leg is likely. Still always in long, but I still think a trading range day is more likely than a bull trend day. However, we do not yet have a clear top, so it's a low probability short below 23 despite the failed breakout above the high of the day, the 15-minute moving average, and the top of the channel. Situation like this, bears are better off either scaling into shorts with limit orders above bars, even above 3. You sell 3, you sell more, 1 or 2 points higher. You try to get out at the 3 high, right? Or they wait for a second entry short. It goes below 23, tests up, and then tries to reverse down a second time. Wedge, but a lot of good bull bars within it, lowers the probability of a short below 23. First shorts when the market might be losing momentum and evolving into a trading range. First shorts are better off with limit orders because the first reversal down usually does not go very far. Shorting with a stop then below bar 23 is shorting fairly low down from the high. And if sideways is more likely than down, it's a losing strategy unless you're going for a swing, betting this is the high of the day. If it is the high of the day, just like yesterday when we got this, I said it might be the high of the day. I also said if it is, we would have to go sideways to build up some selling pressure. And the same is true here. 22, possible high of the day. But if it does become the high of the day, we'll probably have to go sideways and create some selling pressure, some bear bars, before the market will go down very far. For the bulls, 23, a pullback. Just like 19, a pullback. But we've already had the second leg up. It's possible that we get a measuring gap, 23 low, 17 high, and then a measured move up. Right? But I think a low probability buy above 23, low probability sell below 23. If I had to do either, I would probably, if I had to do either, I would buy either above 23 or below 23. But I think the best choice is to wait to see what happens. I think we'll probably go sideways in here. Should be buyers around the 17 close, scale in bulls, scale in bears who sold the 17 close, sold 2 points higher, trying to sell 4 points higher. They're looking to buy back their shorts around the 3 high and the 17 high. important information, 24, dipped below the 17 high. So the bears were strong enough to dip it below a breakout point. That's a sign of strength on the part of the bears. This channel is still very strong. It's unlikely that this will lead to a reversal. Most likely the best the bears can get is sideways for 5 or 10 bars. Bulls are still hoping that this breakout is strong enough so that we'll get at least another leg up. If we do, I think the wedge will be reset, the count will be reset. So this becomes the first push, second push, and then third push. So why am I talking about a top here? Same reason I was talking about a bottom there. A trading range is likely after consecutive sell climaxes, and traders should be looking to buy low, sell high, and scalp, right? You know, the swings are big enough so that traders can make, 2 to 4 points on scalps. So in any case, we were low, so I wanted to buy. Now we are high, but we do not have much selling pressure. So the first shorts are limit order shorts above bars, scaling and higher. Most traders should wait for a stop entry short. They should wait for the selling pressure to increase, wait for more bear bars, wait for more bars with tails on the tops of the bars, and then look to sell. Otherwise, better only to look to buy pullbacks, maybe to the 20 low, double bottom. Bears trying to create a gap. They're trying to get a close below the lower bar. They failed to do it on 24. They're trying again on 25. And if they do, that will increase the chances that we get down to the 20 low. What about buying above 25, a pullback from a breakout to a new high of the day? It depends on what 25 looks like. If it's a bear bar closing near its low, I think it's a low probability buy. But because we're always in long, traders can do it for a swing. So if it closes on its low, I suspect more sellers than buyers above the high of the bar. Three consecutive bear bars lowers the probability of this as a buy setup, but we're still always in long. To me, it's confusing, so I suspect that we'll go sideways here. Maybe buyers above 25. Not a very strong bear close on 25, so I suspect sideways more likely than down or up. There's a chance we could get a strong breakout here. Get a quick move up, not a quick move up, but a move up to the 60-minute moving average. Traders are thinking a trading range is most likely. That is correct. However, the market may instead decide that a trend is more likely, and this would be a logical location for that to occur. We're trying to get a wedge top, and if instead of a top we get a breakout, 28, 27 could be a measuring gap. Takes us up to yesterday's double top. Today will probably be an inside day, so even though we might rally all day, we'll probably stay within yesterday's range because yesterday was such a big day and we tested near the bottom of the day. We had a similar situation over here. Huge bull day followed by a huge bear inside day. Might get the opposite here, huge bear day and then a huge bull inside day. Big bar here increases the chances that this is a breakout and that we're going to work higher. What are the chances that it's an exhaustive buy climax? That's possible as well. I think it's enough of a surprise so that we're probably going to get at least another leg up after any pullback. Suppose we get a bear inside bar. What about shorting? Failed breakout, second failed breakout, high of the day, third or fourth push up. It's a possible high of the day, but we have so much buying pressure that, again, it's more likely that the best the bears will get is sideways